This is PJ Patterson, and today's video is about some tax tips that will help you as we lead into the end of financial year. So the end of the financial year is quickly approaching, and if you are a property investor, this is the perfect time to think about a couple of key things that you can do to prepare for your tax. One of the most critical things that I see many property investors not doing is getting a quantity survey or a depreciation schedule prepared for their properties. Now, even if you have bought something that is not brand new, might be a few years old, might even be 15 years old, there's a good chance that there is still depreciation and some things in that property that you can depreciate. The investment in a depreciation schedule is usually well worth the money, and of course it is a tax deduction, and you might be very surprised about how much you can save on your tax by getting a properly done depreciation schedule. So that's tip number one. Tip number two for tax time is to consider an interest in advance strategy. Now, this is a fairly complex strategy for property investors. Many property investors that I talk to in my mortgage business have not actually heard of this, but what it enables you to do is to prepay for a full year in advance of your interest and claim that in the current tax year. So usually this strategy is implemented in April or May, sometimes even as late as June, for property investors, because they want to be able to claim as soon as they lodge their tax return, they want to be able to claim all that interest back. So it's best to do it at the back half of the financial year or even a few months before the end of financial year. So a very, very powerful strategy that can make a big difference in your tax return. Now, if you're interested in a quantity survey or getting some help organizing one or talking to someone about an interest in advance strategy, I'm the person to talk to. You can find the details at the end of this video. Click on my website and come through and have a chat with me about those two things. Thank you.